Hey, Northeast San Antonio. Today we're talking housing prices, we're talking inflation, and we're talking interest rates and when we hope to see some relief there. Your August housing market update starts right now. Okay, jumping right into it, and we're going to start off at June 2022 because that's really where we see the biggest change in the market, where our interest rates actually had already spiked at that point, knocking on the door at 7, and we saw people react to that by having some last minute purchases in 2022 in reaction to that, hoping to beat any anticipated higher interest rates, but even from that point on, we saw a fall in some interest rates as different market conditions dictated what the rates could be. People started using buy downs, all kinds of different tactics to get into homes still at an affordable price. If we fast forward to today, we see the home prices in San Antonio at 300,000. We see 290 in Live Oak, 277 in Converse, and Selma at 312. And through all that, my biggest takeaway from there is that people are reacting to those interest rates and the pricing in different areas and acting accordingly. So, for instance, Live Oak saw a huge surge in their prices as people continue to buy those smaller homes, those renovated homes that were affordable. Whereas in Converse, there's a lot of building going on, so we saw a pullback there in some of those sales and prices, even leading up to today. But I expect that will turn any moment now, as folks realize, well, maybe we're going to stop buying in Live Oak and we're going to go back to buying in Converse, or even San Antonio, because Live Oak is actually closing that gap. It has a historical gap between prices, the prices in San Antonio and the prices in Live Oak. So, bottom line, people are going to buy where they can afford to live for the most part, and that's why we see spillover from Austin to San Antonio. Folks that can't afford to move into Austin will opt to come closer, either New Braunfels, Schertz, Cibolo, or even San Antonio. So it's just a natural order of things. Okay, so in this graph here, this is from the Bureau of Labor Statistics, and this is showing the historical perspective on inflation and what the Fed may do in certain situations. So if we're looking at the inflation today, we're looking at the gray circle closest to me here at 3.1. That's where the inflation numbers came in June, at 3.1. So we're looking and we're hoping that this number continues to come down and get to that 2% mark. And from what I understand, they don't want to get too far below 2%, because then it brings in all kinds of crazy problems that I can't even begin to explain. But historically, if we're comparing the two time periods, the 70s, 1970s, we had runaway inflation back in 74, about 74 there at 12.2% inflation. And then the Fed reacted after having beat it down with rate hikes to about 5%. They cut the rates, and what happened is they cut them too soon. And at least that's the thesis that they're working on right now, is that they cut the rates too soon, and that caused a second wave of inflation at 14.6. So we're at a point where they're not wanting to cut rates just yet. They want to get into that 2% range. I don't know what kind of magical things actually happen there. I guess enough people will be suffering at that point that the economy is not going to get too red hot again too soon. So maybe that's what they mean. I know that a lot of folks are upset about the interest rates. I'm not happy about it either. It means less transactions right now. And a lot of agents are not happy about it. It means less commissions, less this and that. Homeowners have less offers. Buyers, you have crappy interest rate. So definitely understand all that. But the good news is, looking at this, we are very close to that 2% mark, and the experts agree that we should be looking at lower interest rates into next year, and that's what we're going to talk about next. Okay, jumping right into it. So as I said on the last slide here, we are anticipating, or rather the experts are anticipating, that we will see some rate cuts after we hit that 2% inflation number. Hopefully not too far past that. I don't know what could happen if they waited too long. Some really weird things that I can't understand, but hopefully we will hit those numbers soon, and the Fed will pivot and start cutting rates and start affecting our mortgage rates. But as you can see here, fourth quarter 2023, Fannie Mae, Mortgage Bankers Association, and National Association of Realtors all on average agree that we're going to have about a 6.25% interest rate for the fourth quarter here. First quarter of 2024, we're looking at about, on average, a 6.07% interest rate. So a little bit lower there, which is good news. Part of that's also going to be seasonality. Interest rates usually don't kick up until there's a lot of demand, or more demand coming out of early spring when school lets out. But second quarter, again, we're looking at about 5.9% interest rate, and then even lower than that in the third quarter, 5.73. Now these projections are all taking into account the anticipation that the Fed is going to cut interest rates. We don't know when or by how much that's actually going to happen, but historically, it's something that's going to happen. And how it affects the entire market, we just won't know until we actually see it happen. So for those sellers that are locked in, and instantly, a lot of sellers are buyers. If you're trying to figure out the market, it's your first time buying. A lot of sellers are also buyers. They are also your competition, and they're waiting because they're locked into a 3.75% interest rate. Now, I don't think it's not gonna get down there anytime soon to that number. Who knows? It could be decades before we see that again. I don't know. But if we get down into the fives, the consensus is that you're going to see a lot more sellers put their homes on the market, and you're going to have more competition from those same sellers in the market because they're ready to sell. They're ready to get that 4-bedroom they need because they have a growing family. They're ready to get that 4-bedroom they need because grandma or grandpa moved in with them, or they just don't like the place they have. And now that 5% range looks a lot better now that rates are higher than that. And folks are saying, if I had to buy, around a 5% interest rate would be okay. They would trade up for that. So hopefully that I made that make sense for you. If you have any questions, or you're thinking about buying, selling, moving here in Northeast San Antonio, Live Oak, Converse, let me know. Be happy to help you. You can reach me at 210-260-6617. And until next time, I'll see you around.